JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 21st of February 2022. So yep, welcome everyone. Welcome to this Monday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which is also updated on a daily basis. So yep, check us out here on jfdbank.com. and click on the research tab right there on the top. So now then guys, jumping into the charts. So today could be a bit of a quiet day. We have US and Canada closed today, so the main focus today will fall on Europe, of course, and the ongoing geopolitical tensions and everything, and how that's going to play out, you know. But for now, coming here to Nikkei, looking at this picture here, you can see that the index today the index managed to stay above this 26,765 level that I talked about previously. Now, initially we did break below it, but as you can see here, the index, yes, reversed back to the upside and climbed higher. Now, one thing that I can do here is I can remove this upside line, no longer valid. Now I'm gonna I'm gonna redraw it and kind of keep an eye on this downside resistance line taken from the high of the 10th of February. Now, in order for me to go lower, I still need to see that strong move, and I would like to see the daily close below that 26,765 level in order to, like I said, go for lower levels. So for now, let's keep an eye on it and let's see how this is gonna play out. Jumping into Shanghai Composite very quickly, guys. So yeah, we had a good push north today, but as you can see, it kind of although we didn't really see much activity, I would say, still we managed to remain above this upside support line taken from the low, the 28th of January. We also managed to stay above the 21-day EMA, which also could be seen as a bit of a positive sign here. But yeah, for now, I mean, as you can see, I mean, I've drawn this arrow here previously, and what I said that in a way, if we pop above this 3,500 level, yes, we'll go higher, but we do have this downside line, which could still, you know, remain here, which could still be an important line to watch because it could provide resistance. So that's why for now, from the very short-term perspective, we'll go slowly. Yes, I'm leaning a little bit maybe towards the upside here, but I would prefer actually first to see a push above that 3,500 zone and then go for some higher levels. But yeah, if instead we drop lower here and we fall, and let me grab one of these lines here, and if we grab below Friday's low here near the 3,447, then we could go for some lower areas here, and then we'll take it from there. For now, judging from this, like I said, it's an interesting spot here. Like I said, cautiously bullish on this, but I would need to see maybe a push above this 3,500 level first in order to maybe go for slightly higher levels. I do understand that maybe this area is not a huge one, but you know, let's be safe than sorry. Jumping into the German index DAX. So here we have an index which, yep, sold off heavily here on Thursday and Friday. But once again, we managed to remain above that. The lower side of the range, the so-called neckline here of the double top and the head and shoulders patterns here. So this area continues to hold, and if we take a look at the cash index right now, we'll see that the price is jumping back up, and we are trading now near the 15,200 zone. And actually, let me just, this is where I need to adjust the level here. No longer this is valid. I'm going to keep an eye on the low of Thursday near the 15,206 zone. On the cash index, we are currently near it because we're seeing a beautiful rebound. But of course, if we just look at this picture, I mean, even if we travel a little bit more to the upside, keep your eyes on this downside line because basically, I mean, we are stuck right now in kind of even on the from the very short term perspective, we are in this descending triangle pattern. So in other words, basically something like this here could still be possible, and we could go higher. We could test the 200-day EMA, the 21-day EMA, maybe this downside line, and then kind of drift back to the downside here. If this downside line gets broken, now that's where it could become very interesting for a few more buyers. I'm not saying that I'm going to get very bullish, but we could maybe start looking at some higher levels. However, of course, as I mentioned before, I would prefer to wait for a push above this 15,728 zone right here, roughly around here, guys, and then go for the upside, because this is the midpoint of this range. And then, yeah, potentially more buyers could join in if we climb above this hurdle. But for now, of course, we're sticking to the so-called neckline, the lower, also known in this situation as the lower side of the range. Yeah, the fact that we are having a strong rebound now, that's quite interesting. And I think we are already on the cash index. We are already above this 15,206 zone. Why? Well, I mean, that's quite interesting. That is quite interesting. So yeah, let's see how all this is going to play out, of course. The S&P 500. So as I said today, that the U.S. and Canadian markets are closed. On Friday, we saw the index falling here and drifting nicely to the downside. It's currently it fell below that 4,365 zone. Of course, this kind of creates that more of a bearish atmosphere. However, looking at, like I said, the cash index, for example, right now, it is shifting a little bit to the upside. The futures, 4,392. That's where we are right now at. So basically, we're back above this hurdle. And of course, if Europe, if Europe continues to rally today, then well, I mean, maybe we could see a nice, beautiful opening here to the upside on the S&P 500. And if you're if we're looking for some upside, we still need to see a break of this downside line, taken from the high of the 4th of January. Now, if we climb above it, then yes, we could potentially consider a further move north. However, as I said before, for me to get a bit more comfortable with the upside, I would need to see a push above this hurdle right here, and then we will take it from there, guys. DXY dollar index, so drifting back down. Yep, so as I said before, as I said last week, as long as it's going to stay in this area right here, I'm kind of approaching this one from the neutrality side, because again, I don't really like this. I mean, we could see some choppiness here, and and then eventually maybe then we'll get some sort of a pop here. But for now, we're not really getting that pop. So for the upside, I need to see a nice, good, strong move above the 96.30 zone. For the downside, I would prefer to see a drop below these two upside lines, below the 100-day EMA, and in addition to that, maybe a drop below the 95.14 level could do the trick here for a few more sellers, guys. So yeah, keep that in mind. But for now, I'm just kind of, like I said, I'm just observing this one. Gold. Okay, fantastic movement last week. We had a good move here, but at the moment, everything's kind of working out according to this idea that I've mentioned here. So if you remember, I talked about this, that we could still see maybe a push higher, but eventually, I mean, given the sharp up move that we already saw here, maybe a bit of a retracement here could be possible. This is what we're getting right now, and I would say that even if it drifts further south here, I'm keeping an eye on the highest point of November here first, near the 1877 zone. If that holds, maybe a nice good rebound here could be possible. However, if it doesn't, then maybe yes, we will consider a bit of a a larger correction here to the downside. But we'll take it from we'll pick it up on that one then when we will get that actual break here. If of course we get that actual break. For now, I'm keeping an eye on this area. And like I said, we could drift a little bit more to the downside, maybe test this highest point of November, and then if it holds, a nice rebound could be possible. If it falls, if it falls below it, then yes, my next target is around the 1853 territory, somewhere around here. Now jumping into WTI oil very quickly. So this one's still undecided. However, this looks a little bit more on the bearish side, to be honest, because this formation right here is kind of looking quite, like I said, quite negative. Now, if you remember last week, I talked about this being a possible kind of maybe head and shoulders pattern. I said that the neckline could be somewhere around here, and look at this beautiful move on Friday. We've traveled lower, we tested the 21-day EMA, and then we quickly reversed back to the upside. However, today we had an attempt to move higher, but for me to maybe, let's say, aim for slightly higher levels, let me just quickly overcomplicate the chart with more lines. So for me to, like I said, to kind of get a little bit more excited with the upside, I would need to see a push above this barrier right there, the 93.34, roughly around here. But what I said before, that in a way, even if we drift lower here, we could test the neckline, then we rebound, and then another slide could be possible. So for now, it's kind of working according to that plan. Like I said, I'm still keeping an eye on this 88.82 zone right here, which is not specifically that level, but the area, the area around this level, because again, it's not really clear. I mean, I'm keeping an eye on that 21-day EMA as well. So, but if all this area gets broken here, now that's where it could become, like I said, quite interesting, because more sellers may join in, because this might confirm not an ideal, I would say, a head and shoulders pattern, but hey, we'll take it as it is. However, this whole idea with the head and shoulders might get scrapped if we, like I said, if we push back to, let's say, above this hurdle here, this 93.34, then of course we'll have the last chance. We'll have to, maybe to get a double top here. But if that, if this area gets clear, this 94.89, then well, I mean, this could just continue, rallying, maybe even towards that 100 level. But again, let's see how this is going to play out, guys. Jumping into Ripple. So, okay, so the 21-day EMA continues to hold, so that's good. We are seeing this descending triangle pattern here forming, which, of course, according to all the TA rules, tends to break to the downside. But this is when you have to kind of, pick up some more candles here for your analysis, because maybe, just maybe, this could be seen actually not as a descending triangle, but more as a pennant, as a bullish pennant, because we have our pole and we have our a flag kind of shaped, pennant shape formation here. So in other words, that pattern tends to be a little bit more positive than negative. So that's why I have my arrow like this. Of course, don't get me wrong, if we suddenly drop below this 0.7468 zone, then yeah, I will maybe consider a bit of a move here to the downside. But again, not a huge one maybe, but yeah, for now this is how it is. For now, I'm looking at, like I said, I'm leaning a little bit more towards the upside. However, if you want to be a little bit more on the safe side, and you have the full right to do that, because like I said, we are still in this pattern here, and to be honest, as long as we remain in this pattern, it could still drift lower, because if it, if it sticks here, then yeah, the kind of the trend right now, the short-term trend is to the downside. But if it exits this pattern, then all eyes on the high of the 15th of February near the 0.8595 zone. If we oh, sorry, the wrong line here. Let me just grab this right here. There we go. The high of the 15th of February here near the 0.8595. If we clear that, then maybe at the same time we could jump above the 200-day EMA and more buyers could join in. So yeah, a lot of, like I said, a lot of interest around here. For now on Ripple, let's see which way this is going to play out. AUD USD. So guys, pushed higher today, rebounded nicely, and yeah, we continue to trade above this upside line taken from the low of the 28th of January. But to be honest, looking at this and how everything's shaping up, I would actually prefer maybe to wait first for a push above the 100-day EMA. Then my next target will be the highest point, the current highest point of February near the 0.7249. And if that gets clear, then slowly I'll go for the 200-day EMA or the 0.7314 zone, marked by the highest point of January. So keep that in mind. For the downside, now we had a beautiful hold up here near this 0.7170 zone. I talked about it. I'm gonna keep it for now, because like I said, maybe if it decides to reverse back down, maybe this level could play out nicely. So I'm gonna keep for now on my eyes on the 0.7170 zone. USD CAD very quickly on that one. So previously I talked about this idea of maybe seeing a bit of a squeeze here, because we are trading below this downside line taken from the high of the 20th of December, and then we're trading above this upside line taken from the low of the 21st of October. In terms of the downside line, we can actually get rid of it now because it got violated a few times, and you can see that it's not really carrying any significance. What's carrying more significance here is a possible range here, guys. So something like this right here. Let me just actually draw it the way I normally draw it. I mean, I prefer it this way. So yeah, for now I'm keeping an eye on the areas right here. For the downside, of course, that 1.2650 zone is in focus, but for the upside here, I mean, we have this 1.2787 level. That's what I need to see here, a break off in order to go for some higher levels. For now, we're just monitoring this one. Yes, on one hand, we are trading above all of the EMA, so that's great. So kind of a positive sign here, but again, we're stuck in a range here, so it might just move sideways here, up and down. So that's why we're just waiting for this one to make a better move. GBP Aussie very quickly on that one, quite interesting. So we are near this key support zone, which is the upside line here taken from the low of the 2nd of November. For now, I would say let's be very careful here. Let's be very cautious. I would actually, like I said, I would actually like to see maybe a rebound here, of course, personally, but again, it's a little bit tricky here. I mean, we are kind of in this, we are still trading above this upside line, of course, but on the same time, we got very close to it again, and the more we kind of come over to test the line, the more chances it has to break. So yes, we'll like I said, we'll keep an eye on it. Maybe we'll rebound nicely. Okay, that's great. But if this gets broken, if this upside line gets broken, and then we see the pair falling somewhere below the current lowest point of February near the 1.88 zone, now that's where it could become a little bit more interesting for a few more sellers. For the upside, well, we need to see a nice good break of this tentative downside line here, taken from the high of the 28th of January, and then yeah, we could go for some higher levels maybe. But you know, for me personally, actually, to be a little bit more on the safe side here, I would actually like to see, for now, I would like to see a push above the 1.9057 level right here, and then kind of go for, you know, for some higher levels. Until then, well, I mean, keeping an eye on this, and keeping an eye on this this hurdle, these two levels right here, and of course on this upside line. That's what I'm keeping an eye on. EURUSD. So EURUSD, if you remember, last week I talked about this pair, and yep, I said that. Well, I mean, first of all, yes, we were trading in a nice falling channel, but also at the same time, it could be seen as a nice bullish flag. Well, guess what? I mean, everything seems to be working out nicely here. So we've broke the upper side of the flag and the channel. And yeah, we're also climbing above this 1.4463 zone right here. So, and that means that, yep, there is a good chance for this one to move further north here, maybe towards that 200-day EMA. But again, this is the beginning of the day, guys. It's just the, you know, the early hours of the European morning right now here. So slowly let's go on this one, because if it does stay above this 1.4463 territory, yes, I'll continue aiming higher. If it falls back below it, I'm gonna take a neutral stand. But if it starts drifting somewhere below this hurdle, let me just quickly grab this for the chart here, below this low here, the low of last week near the 1.4375 zone right here, that's where, yes, we could maybe consider a bit of a move to the downside. So long story short, that's my level for the downside for now. But given that we continue to trade above the 1.4463 territory, yes, I'll continue aiming higher. EURUSD. Beautiful move back up, but as I mentioned before, guys, to you, that as long as it kind of oscillates around that 21-day EMA, I'm just not touching this one. I'm just observing the price action. Of course, on the positive note is the fact that we're still trading above this downside line, so that's great, good news. But yeah, I would probably take a very careful and, you know, cautious approach here, a conservative approach as well, and wait for a push above this barrier right here, guys, this 1.1483, and then go for some higher levels, because this could be seen as a nice neckline, because we have a possible, not a very pretty inverted head and shoulders pattern. So yeah, I mean, this could all play out nicely later on if we do pop above this 1.1483. I do understand we could be missing out on a bit of territory, as I've mentioned to you last week, that if you want, you can keep an eye on this 1.1396 zone right here, and then go for some higher levels. But yeah, be very careful for now. It could drift higher above this area, but we do have the 100-day EMA, which, you know, recently did act as a good area of resistance. So kind of keep that in mind as well, if you are aiming for some higher levels already a little bit earlier than, let's say, this level right here. For the downside, a drop below the 1.1235 level, for me personally, that's what I need to see here in order to go for the downside. So that's it, guys, for this session. I really hope you found it useful. Thank you very much for watching and listening. I really appreciate your time, guys, your views. I really do. So thank you for that. And if you want to catch me tomorrow morning, as always, I'm a Trader's Espresso. That's 7 o'clock GMT time. For now, have a wonderful trading day. Stay safe, and yeah, I'll see you later. Bye-bye.